Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Well, good day, all. Ira Epstein of Linn Associates with your financial market update for this Monday, the 9th of April, 2018, just after 6 p.m. Central Daylight Time. So we were strong as can be all day today, and then an event happened where we heard late in the day that the FBI was raiding President Trump's personal attorney, Mr. Cohen's office. Why, what they're finding, none of us know. With that, you just took the wind out of the sail and the stock market sank back to reality. The president today also came out and said that within the next 24 to 48 hours, there'll be a reaction to the Syrian bombing of innocent children, women, and the whole thing. We've heard this before. What our president has promised not to do is tell you what he's going to do. So I would expect that we wake up at some point and we just find out that the U.S. has done something, whatever that something is. It would not be a surprise. The metals don't seem too concerned about it. The stock market, I think there's some worry there. They don't know what you'd be getting into. I know that when I was leaving today, I wasn't leaving. I was moving my office internally today. It's one of the reasons, if you're a subscriber, you did not get my morning subscription video. We were moving house. We have painters and everything in the office. They've been here for a week, and now all of a sudden I had to move my own office to another office. It'll be my new permanent office, if you will. My staff will be right next to me. And to make a long story short, I just couldn't get it done. But when I'm looking at this, if you were going to get worried about casualties in the Mideast and us doing something in Syria, I don't think it cuts off the oil. It's not like we're attacking Iran. Attack Iran, a whole different game happens. If Iran's behind all this, they have to prove that. Right now it's Mr. Assad, and I would say that he's probably a bullseye target in some manner by the U.S. I don't know what that manner is. When we look at the S&P, you have not bounced very much at all. You tried today, and that's about all that I could say. This is tonight's, let's get to just today. You got all the way up here to 2650 and gave up just about everything. You managed with a close of 13 points higher after getting as high as 2650, 375, and tonight you're slipping back. So this market doesn't have the upside oomph. When I go to the market and I look at the swing line to get an idea of what I have, I certainly have higher lows and I have higher highs. Tonight's trade so far an inside trade, which means it hasn't taken out Monday's higher low. Because I'm putting this out after 6 at night, we're already into the Tuesday trade. What seems to be offering the resistance, and other traders are looking at it, is the 18-day average of closes. I think you see it right there. What's offering the support is the 200-day moving average of closes. What has been bearish is when the short-term average of the 18 got over the 100, it added downside momentum, and the market's been unable to fight its way back over that in any time. Obviously, if you drop much more, I think everybody will be looking at the 200-day average, and if you close under it, then you're going to see the newscaster say there's a new problem, market's losing momentum, and maybe the market's going to add another leg. That would be what I'd expect to hear if you closed under it. When you come over and you look at the Bollinger Bands, you have not attacked the upper one in a long time, and the bottom one was attacked last week, and you managed to very nicely bounce away. In terms of momentum, you're going sideways, and you are not oversold. The market has climbed out of that condition. So if it wants to break down from here and get under 2584.5, you will create another pattern of lower highs, lower lows, under the 200-day average, which could put immediately that 2544.5 zone as the next downside target. We'd see. It doesn't have to go there, but it would certainly be a potential target. In the NASDAQ, like the S&P, you had a pattern of higher lows, higher highs. Now we're having another inside day. Here I want you to look at what's going on with the combination of the 18-day and the 100. Are we going to get a bearish crossover? Not yet. The 18 in red has still got higher numbers than the 100, but that adds power to the downside. How do you negate it? Get up and over it. That's not an easy task. That's going to be a lot of traders that are moving average traders looking at that as a resistance point, with the next support point possibly being the 200-day average. I've got it labeled for you there. Unlike the S&P, this market is oversold. In the Dow, battleground, 18-day average of closes. 3 days in a row you ran back to it. Some traders ask, what is the importance of the 18-day? Well, some use the 21-day, 20, 19. I've seen everything. I like the 18 because I've run studies back over time when I was starting to use moving averages, and there were services that would come out and optimize on a daily basis which market is better. They'll go back in time and say, you're better off with a 19 in this. I tried those. They didn't work out for me the way that I wanted. That doesn't mean that you shouldn't try one. I'm comfortable that the 18 is good. Markets that look at moving averages are looking for a neutral zone. That number's it, the 18-day average. So when you're under it and you rally, it becomes resistance. When you're over it and you break, it becomes support. And you can see how it's trying to do that. Now, when a trend finally kicks in, where you get the swing line down and the market's under that, as long as you're not oversold, it's often, not always, going to carry a bit. That's all I can say about it, okay? Does it always work? Nothing always works. You're looking for the probabilities on a chart. That's about it. And how do I come with those? Well, 45 years of doing it. Do I plot out every day my data? No, I don't do that. What I love to do is take the name off a chart and then just look at the pattern. So I see resistance at 24,216. I see an uptrend. The swing line's up, so not looking to sell a market when I've got the swing line up and I've got flat momentum. When I come to the Russell, I've got flat momentum. I have higher lows, higher highs, a market that ran up again to the 100-day average 2 days ago, pulling back now on today's Monday, so this was on Thursday that happened, and the resistance starting to show up at 1544. These markets need to get up and over those key moving averages to get bullish. Otherwise, I contend that's where the pros that use moving averages are going to lean into the market and say, you got to prove to me you can stay over that. In the VIX, sideways action, just totally sideways again against that 18-day average. And momentum, can you get any more neutral than being flat in the 50s? I don't think so. In the T-bonds, the market's been trying the upside of the market. Now, there are upside price counts, as we call them, at work in this market. So if something bad were to happen, maybe that's what the market's telling you. Maybe something bad's going to happen here in terms of the U.S. doing something to set the world off, or traders buying the bonds because they're scared of a trade war. That's what I'm defining as bad. Getting to a normal situation, you should be seeing interest rates going higher. That was the word. Well, it's not happening. You have higher lows, higher highs, uptrend. The market is over the 18-day average. It has upside bias. It is overbought now. It can turn into a downtrend if you get under 144.25. Then you would have on this pattern lower highs, lower lows, under the 18-day average, and if momentum started turning down, you'd have that going with it, and you'd have a new downside target back at 143.15. In the 10-year note, this is a market just hanging in there, but it's got lower highs, lower lows. That's a bearish move. You're staying over the 18-day average. The two counter each other, and momentum, just like in the bonds, is pointing to the upside. In the dollar index, you went up last week, and it looked, could the market break out to the upside, and if it continued through that, get up to the 100-day average? Instead, the market went up on Friday, reversed. With that reversal, you take the momentum out unless you go right through it. On Monday, it didn't do that. Falls right back into the 18-day average of closes and sits there. Now, momentum is turning down, which if you believe as I do that momentum leads price, market might carry a little bit here. You flipped that in the euro. You got lower lows and a higher high now, and you stopped at the 18-day average, and momentum's trying to go up. No trends at work. You caught a group of people in the British pound. You had an outside day down on Thursday. You took the high out. When that occurs, it's what I call a bear trap. And that is because the outside day caught this group. They were looking for further momentum. You got over that high. If, the way I teach trading, if the market's going to make what we call the thrust, then because there's no bigger moving average above the market, one of the potentials is the upper Bollinger Band. Here's the market moving today, and here it is tonight. So far, it's trying to do that, and momentum is trying to turn up with the market as well. In the end, the trend is down. Lower highs, lower lows. Now, if you look at the momentum here, both numbers are at 21 plus. You're in an oversold market that has hit its downside target last week, and now it's just developing sideways action off of that. In Bitcoin, you still have the fully embedded reading. That's the number one thing on a chart when it occurs. It takes over the leadership. Until that red line gets back over 20, rallies in this market, in my opinion, will continue to get sold by the pros looking for potentially the lower Bollinger Band. In the Brent versus WTI crude, you've gone from 315 back to 538. Guess what I think? I think that means that a lot of traders can now go out and buy, again, the WTI crude, pay for the shipping, and start bidding it up to close that back in. You're getting back into numbers that are a bit high. And when you take a look at the market in June Brent, this is the world grade oil, you've got the lower highs, lower lows, and how many days in a row have you hit the 18-day average and gone nowhere? Momentum, drifting down. It's like the market has no clue. The swing line's down, but prices refusing to follow through and stay under the 18-day average of closes. The opposite's in the WTI. We saw that we added a lot of rigs on Friday. The market's got lower highs, lower lows. I think the pros are trying to sell the market right here into the 18-day average. The last rally high in the market was this arrow at 64.12. Get over that number, and I think they'd bail. But what's the negative? And the negative is if prices get back under a 30 reading, they'd be oversold. Gasoline. Gasoline is stuck between the green, the 100-day average, and the 18. Now, this is the time of year when I at least start paying attention because often gasoline comes into demand as the weather starts clearing up later in April, and then we're into May and June, and before you know it, the kids are out of school. The gasoline prices, don't you always hear it? They're going up. They don't go down in that driving season normally. I play the norm. So I'm looking for eventually a buy signal. Don't know where it'll come from. And in nat gas, even with this cold spell, we had 2 inches of snow in parts of Chicago today. The Cubs game was called off, the opener, because of snow. We're going to be 67 later in the week. Lower highs, lower lows fell to the lower Bollinger Band. Let me show you this. This is what you looked like on Friday. If you break down lower Bollinger Band target, and tonight you're back up to that 18-day average of closes. So if you want to learn more about where counts go and items like that, you want to take a look at what we offer on our website. Go to www.iraepstein.com and familiarize yourself or sign up for our free tools. I think you'll find a new way of looking at these markets. I'm Ira Epstein. You have a good day. I'll talk to you tomorrow.